Okay, so just to recap in terms of what we'd like to address today, obviously we recognise this is a massive area, and I think we could probably talk for days, as we know, and we promise you we will do some follow-up meetups if you guys want them. But essentially what we'd really like to do today is talk more about, like, who are these investors going to be in Indonesia and Southeast Asia with these massive goals that we have for bringing new investment to the developing world. Let's talk a little bit about who these investors are going to be and how we bring them on board and what that combination or those partnerships look like. We'd also love to talk about some of the challenges to getting some of this work funded. I think you heard from three, fantastic speakers and some great projects that are being funded, but what is not being funded and why? So let's talk about the challenges, either that these guys have had personally or what they see in the space and the startups that they're actually seeing every day. And then we'd love for you guys to give some advice to potential startup founders that might be in the room or folks that might be looking for a new climate job or a new climate gig. What do you advise they should be doing and how they should be thinking about being part of this new ecosystem? So, Nico, I want to start with you in terms of, it's super exciting what you've been able to do in 3 years, and I'd love for you to share more about where you saw white space in the impact investing landscape, why you decided to focus only on impact or nothing else, and who are these incredible angels, and how do we find more of those so we can really fuel this investment growth?
Yeah. I would say, Indonesia is really underfunded, the impact space, and that's, really the opportunity that we saw as a company. But also, we see also there are some huge challenges, like we mentioned, all right? Like the waste is a huge challenge. And therefore, there is really need of solutions. And to be honest, speaking to that, it's pretty tough as an impact entrepreneur in Indonesia to raise capital. That's been pretty much my mission in the last couple of years. I think I've been one of the most active fundraiser for impact projects in Indonesia. And still I am. Still is what I do with most of my time. Really trying to get investors, really sell them, like the impact investing. But also, I think I never mentioned during my presentation, but also like impact investing doesn't mean no returns. Actually, impact investing, in our view, has the opportunity to provide higher returns, especially on the early stage, because at the end of the day, like successful companies are successful because they're solving problems. Otherwise, we wouldn't need them, right? And impact is, like there are some of the biggest challenges, as I've just mentioned. Therefore, the growth, the scalability is really big, especially in Indonesia. So when we look at companies, we really look at the impact side first of all. And then when we convince about the impact side, then in a way we forget about the impact and we see these companies as traditional businesses for, what is how much they can be scalable and so on. And only when they meet the two requirements, then we would push them forward. Because also, in my view, as well, like if there is no returns, there is no impact because it's not scalable, right? Otherwise, you cannot be, create impact just being accepting donation. The model needs to be self-sustainable. So I think that's one. I think I'm going a bit out of topic from your questions, but going to who are our angels? Our angels, they're all, kind of a high business profile people. We have not many of them, actually. We have around 20 of them. I would say like 50% is a really good mix between like Indonesians and 50% expats living in Indonesia. But at the same time, that's in a way, like our mission. This is also what I forgot to mention. about our future project that Bali Investment Club as an angel network will still be alive and pretty strong, and basically because our mission is to make impact investing accessible. So therefore, once we're gonna raise the fund, we're gonna allocate co-investments to the angel investors, and at the same time, angel investors, I think quite a few people in this room can become an angel investor. You don't need much. For instance, on our side, like the minimum investments we require is $25,000. So yes, so that's pretty much the sum. Like to be an angel investor, you really want to understand what you're investing on. You need to believe in it. You need to be ready to lose that money. Even though, maybe, if you do it yourself, it's probably might be more challenging unless you're a full-time angel investor. If you do it through us, that's why our job is to kind of vet good, deals, good potential investments. But at the same time, you cannot, it's not a liquid investment, right? It's going to take a couple of years of time. And as well, you should have more than one investment. So I think that's from my side. I don't know if you have any other questions.
Yeah, great, good advice. There'll definitely be follow-ups. So, Mathias, I'd love for you to talk about, as a startup founder and also then building this framework, how you think about this space, both as when you were seeking funds, like what were the challenges you were facing coming out of Singapore and Bali, but then having this global mandate. And then how do you think about this space? If we're going to change the game and hit some of these crazy $1 trillion numbers, how are you thinking about this space and changing this game?
I think to answer the question that you asked, Nicolo, so on our side, we actually pulled 40 business angels. We pulled the investment of 40 business angels into our pre-seed round. So we raised a pre-seed round of $800,000, 40 business angels. And I think what's super interesting is to look at what's the commonality between those people. So of course we are Singapore based, so there are no Indonesian investors. It's mostly like American, European, and Singaporean basically. But the commonality is really like they are all visionary leaders. They all have like, they are one step ahead of the adoption curve for most of the things. It's like CEOs of big companies, famous philanthropists like Elizabeth de Rothschild, or people that have started funds like Keng Nam Lee from GGV Capital. So it's like those like super visionary leaders. I feel those are today the people that invest in impact more than anyone else. So that's for the business angel aspect. And then to answer your second question, what we faced, what we experienced when raising our seed round, we had lots of conversation with impact VCs in the region, also VCs and also corporate VCs. And really their main focus, so I really liked your presentation where you show like the three metrics that you expect, because that's really what impact investing is about measurable returns. On our side, what we advocate for is that those returns are actually quantifiable in US dollar in terms of ecosystem services rendered by the action of a startup. That's what we are advocating. And it's something that we have experienced talking with impact VCs and VCs when we raised our seed round, is that there is no real standard way of approaching the problem. So that's why we are very vocal on LinkedIn to offer solutions to impact investors and to really try to push the regenerative agenda and offer a new dimension of metric, a new metric for impact investment, which is ecosystem services, because it's a metric that spans across all impact, right? All environmental impact, actually, to be more precise. And that is beyond carbon, and that really is aligned with nature rather than aligned with a linear system, for a linear thinking of solving one problem that is, like either like global warming or etc. So that's what we have experienced. But it's actually changing fast, and there are more and more VCs like BIC that are implementing very cool stuff, and it's exciting for the future, I think.
Fantastic, thank you. Bruce, I'd love your point of view from working within, obviously a massive, what was a startup, to the sustainability framework you were creating and some of the goals that you had. How did Gojek and then GoTo Group think about not only the financial metrics of what you were doing, but also some of those social impact pieces? And as a business, how did you consider reporting on those? And then what was that journey like?
Sure. I mean, I think it's definitely a journey. And I think that they're at the point now where there is a regular sustainability report that comes out of GoTo. And they try to also make it very focused down to the 3 zeros. So 0 emissions, 0 waste, and 0 barriers. So the 0 emissions was how do we really have a meaningful impact and be responsible and be held accountable for how many emissions. So that was where you think about, how do we electrify, but how do we electrify in a smart way over time. 0 waste, again, was a lot of waste in terms of kitchen products, as a lot of merchants moved from just being cooking on their own premises, getting so much business they had to actually have kitchens that were just designed to handle the volume of orders. But there was a lot of waste at the end of the day. So what can we do with that waste? That can go to farmers, actually more for the livestock. And then 0 barriers was actually about DEI. It's about making sure that Gojek was a very inclusive place, one of the most inclusive places I've ever worked, where everybody has a voice and has a role, and can move up and be in charge of huge areas. So very diverse workforce, and if they feel that this is a great place to work, and I can be me, and I can be successful, you get a lot of very hardworking and very creative people. So I think it has different timescales in terms of the impact, and I think they, along with a lot of organizations, are learning. What are the other things that we can do? How do we, as I said before, you solve one problem, you can electrify, but then how do you get sort of green energy that has a better source? So, of course, they're buildings. They're going to committed to have green energy for the buildings, make the buildings sustainable. But how do you actually then have a network that has green energy? That's a bigger problem. Might take a little bit longer. But they also work very closely with the government, whether it's the government of Indonesia, the government of Vietnam, the government of Singapore. That's a very important conversation that they have as well, because they have to say, how are we going to create this infrastructure? So it was definitely a process. I was one of the early sort of executive sponsors for this work, but we really needed somebody, and so we hired a lady to sort of be the head of this whole initiative, and she kept everybody honest. She was very involved with product management as well, in terms of what are you going to do, what is your contribution to these goals? How can we push ourselves, as well as working with finance, as well as working with government. And so you need that, you sort of need that focal point when you're starting off, and eventually you won't need that person because it's just part of business as usual. And as I mentioned, some of the best speakers I heard at New York Climate Week were actually people who are now this chief ESG officer, and they are really trying to get companies in shape and thinking about all of these things. But does that answer your question?
Yeah, well, I don't know if there's one answer to that question, but I think your insights are super helpful in a place like Indonesia and Southeast Asia. So a question to the panel collectively. It's fantastic that you've got angels and you've had folks that are like really ahead of the curve thinking forward about this space. But looking at the dollars we need in this space, how do we bring a broader raft of players? How do we expand that thinking? And how do we get more dollars into this space faster? Knowing the need and knowing the development opportunities that are on the ground every single day in places like Indonesia. So just going to throw it out there if anyone's got some brilliant ideas in that space.
Like in 1 week I'm flying to Europe, try to get institutional European money to come, and invest in impact investing in Indonesia. I think we will improve the situation. There will be way more money flowing in the impact investing. Again, this is a fairly new term, especially here in Indonesia. So, investor needs to, be educated. We also need to show that, impact investing can provide great returns, especially on the early stage investing side. And I guess also from, in our really, on a small level, our side, this is also what we're waiting is, like providing the first exits and, really proving that, you can make great returns, providing great impact. So, but overall, again, like there is a lot of new climate change focused funds popping up all around Southeast Asia. So I guess Indonesia is one of the most backwards, but otherwise on the Southeast Asia, there are many new funds popping up.
Great, thank you.
Yeah, just quickly, I think it's super important to differentiate short-term solutions from long-term solutions. So long-term solution, typically energy transition and all of that. But there are many things that we can do today, right? And what we focus on at Handprint really is almost, maybe it's very ambitious, but it's almost to crack capitalism, to turn it into a lever of good. Right? It's to play on like the greed really of the big corporates that see a financial interest in engaging in sustainability, and turn that money into good, right? And I think that's one way to make it super scalable, rather than to go one impact VC after another, raise funds, build ventures, is really to use the existing system almost against itself, or to change the current system in a way that benefits nature rather than extract only from it.
Just a quick point. So I hear that sometimes people hesitate about investing in Indonesia because they feel that seems very risky, and so I think we have to change that story. But I also think there's a lot of money in Southeast Asia. There's a lot of money in Southeast Asia, and it needs to be redirected. And I think it's a bit shameful that it's not being directed to the right places today. I even hear about a lot of private equity is actually shoring up, ongoing fossil fuel discovery efforts. That should be redirected. But I also think a lot of these subsidies should also be redirected towards some of these efforts as well. So it's a multifaceted problem. But I think we can all work on different facets of that. Even within Scale Climate Action, I think we'll all be working on different facets of that. But I think the money is there, but I think there's a lot of confusion, and I think education is part of what we can all help with, is simplify this, get the argument has stopped, this is happening, we all feel it, and there are solutions, and small solutions can be just as important as the huge solutions, and how to get those into ordinary people's homes in a way that's affordable. As well as the big infrastructure changes that might take a little bit longer. So,
great. I'm going to ask one more question and then get your questions ready. There's a lot of smart people in this room that I love to see in this conversation. Matt Leggett, I'm looking at you too from yesterday's discussion. So to that point, we know that Indonesia, massive potential, young market, 270, 280 million people who are, depending on who you ask. And as Bruce and the GoTo team have shown, they have become an incredibly sizable and valuable business in Southeast Asia, not just Indonesia. So I would like to ask you guys to give some advice to budding entrepreneurs, folks that want to start up something in this space. What would you guys start, and what's some advice for what you're seeing and not funding, and what you would be funding if you saw some new businesses? Nico?
I start. I think in general, pick a problem and then solve like a micro problem within the bigger problem and start from that. And as well, like make sure that really think through the business model, make sure that the business model is scalable and can become profitable. So I guess this is really like the basic on the ideation process. So just to recap, pick a big problem and then focus on the micro problem within the big problem, and then scale it up from there. Yeah.
Sure. Yeah, we'll change the order. I would say that as a young product manager, one of the early lessons I got was I would have lots of great ideas. I would hear lots of great ideas from people internally, from business people. But it was actually going and visiting families and spending a day with a family. And you understand so much more you could never have imagined. And it inspires you to come up with solutions for them. So the most important thing is to spend time with your potential customers and get to know them. They're probably quite different to you, or have different problems and different things they're stressing about. And it's very important, given where that we are, that we also don't live in a bubble. That we are spending time in Indonesian communities and with friends and with businesses and trying to understand what they're going through, because I think it will inspire you. And it will also help you understand that if you really do identify a real problem and you can solve it, how are you going to engage and how are you going to market that problem? How are they deciding what to buy today? Is it just always the cheapest, or where do they go? I'm continually learning and seeing a lot of things happening online. It's a very connected country. Very connected country, and they really like things like these sort of video events that happen on different e-commerce sites, where you can go and you can listen, you can see something being talked about, and things are changing all the time. And it's a younger audience. Video is very important, but it's learning where to engage and making sure that you're solving a real problem. And I think this I was here a couple of meetings ago. I said, be prepared to change your solution based on what you hear. Because the problem you think you're solving, you might change your mind when you start talking to people, and you'll end up in a better place. But it's about a lot of it is about listening and observing and talking.
So I'd like to answer the question by saying what not to build. So first, I'm super aligned. I'm a product-oriented founder. So of 100%, you should spend your first year on the phone with your users, going in their office, understanding their problem. That's 100%. I'm very aligned. What I would like to answer is that what not to build is really in the past maybe 18 months, I've seen so many new teams entering the climate tech space, asking us questions because of course we are just one step ahead. And most of those teams are solving the same problem, and it's a problem that is completely overfunded today in the impact VC space. Probably there will be 1-2 winners and a lot of losers because it's a very easy problem to solve. It's ESG platforms for corporates. I cannot count how many teams I know that have started ESG platforms for supply chain, ESG platform for carbon footprinting for transaction, carbon footprint. It's what they are really solving as a problem is quantification of responsibility, which is a problem that is actually quite easy to solve. And we don't need thousands of teams on that problem. And today it's completely overfunded by the impact space, because when you're not from the impact space and you enter the space, it's the first thing that you understand. It's first we need to measure, right? But ecological responsibility doesn't equal carbon footprinting, and it's something that that is super hard to get the message across. So many teams are tackling that problem, and it's actually not such a big problem. And a good analogy that I can give for everyone to understand is that if sustainability was the financial system, we would be overfunding accountants. So now we are putting a lot of money in many accounting firms. And the actual entrepreneurs doing the work on the ground, creating value, are completely underfunded. And it's an analogy that's exactly what's happening at the moment. So that was my rant.
Direct, I love it. Okay, questions from the audience. Do we have questions here? Matt. I'm going to let Matt introduce himself because he's...
Hi, thank you. Thanks for some really interesting presentations. My name's Matt. I run a company called Teratai. And I won't give you an introduction because I want to really jump into the questions. I've actually got 3, but I'm going to stick to 1 because others may have questions too. And it's for Mathias, first of all. So, super interesting presentation, thanks. How do you, on the supply side, how do you manage the risk of failure? I guess, with, I've done a lot of work myself in regenerative projects and restoration, and often what happens is, you pay your $2 to, I want $2 to plant a tree, and then, in reality, it's somebody throwing a tree out of the back of a truck, the tree dies, and nothing happens, right? So that's one of my questions. So once you've done your due diligence on, making sure it's a decent company, how do you then kind of track that and make sure it's not dying, investments going nowhere? And then the related question is, how do you, again, from my own bitter experience, how do you quantify ecosystem services in kind of dollar values? Because there's obviously a lot that goes into that, and often those values are quantified with respect to what people get out of those services, and not necessarily kind of what the value is in the kind of wider system.
Thank you. Two very relevant questions. So on the first one, how do we make sure? I think we have, I would say we have two layers that tackle that problem. One is it's prevention. So we have set up some type of game theory approach to incentive alignment of the teams on the ground. So basically what happens when we pre-fund a project, let's say a small restoration project of mangrove, we give them the first $25,000 to kickstart the project, to pay the first salaries, to buy the trees from the nursery, and then there is a payment schedule that is unlocked upon reaching certain milestones of the project, okay? So that's for the deployment of the project. And then we have two verification layers. One is a social verification layer. You can really think of it as us outsourcing verification to people, citizen science, so people that are visiting the site, taking pictures to make sure that the claims done by the NGO are verified, basically. And then technological verification, mostly using satellite imaging. So we have partners, companies that purchase satellite images before the project, after the plantation, and on a regular basis. It compares the biomass, and they send us reports about the biomass state change analysis, so what has grew as biomass. And we actually bundle in the price of the impact an insurance for trees that are not surviving. Right? We have a survival rate of around 65 to 70% for restoration sites. So in that, it's bundled the cost of replanting the trees that are not surviving, and we have insurance mechanisms for that. For your second question, which was the ecosystem services. So this is really an emerging field, right? And it's still, I would say, it's still a question that is at the lab or at the academic level. There are many emerging frameworks. Today, the main approach is to compute a difference in difference analysis. So what would be the state of the bioregion without that ecosystem? Let's say, for example, a forest creates biodiversity that pollinates the crops around. It creates social impact due to the ink that you can extract from the mangrove roots, for example. So all of this you compute. It's a valuation. Huh? Just like startup valuation is a bit, it's backed by some models. Models are imperfect and continuously improved. But it's really about quantifying the difference of the ecosystem. Version A, so scenario A, it exists. Scenario B, it doesn't exist. And every month there are new ecosystem services valuation models that are, in the scientific literature. We try to stay up to date as much as possible, especially for new types of ecosystem or ecosystems that have not been studied as much as forests, like coral reef restoration, for example. And then we compute all of that. We reference the literature that gives the model, and we send that to our clients. That's how we do, and it's an imperfect and continuous improvement process.
Great. Other questions from the audience?
Hi, my name's Gove Dupuy. I have a small land management company. But my question is for all three of you, I guess, is really just, are you seeing any trends in the space? Is there something that everybody's going to be doing next year and we just haven't seen it yet? a particular app that everybody's going to be using, or is everybody going to be planting bamboo, or any particular trends that you're seeing?
From my side, what I can see a lot of in the agri space, a lot of like SaaS for farming, like lending for farming. So many like startups in the agri tech lending space. That's I think the ones that I see the most, at least here in Indonesia. But otherwise, I don't think there's going to be like a specific trend, at least that I can see. Yeah.
So from my perspective, so from what I know, which is a very niche part of sustainability, right? There is this report that McKinsey published, I think in January this year, and they are really outlining the emergence of a new market for nature. So that's why we are pioneering these nature credits. And that's really about companies building natural capital as part of their contribution to nature, rather than buying carbon offset and making offset claims. I think that's really, at least McKinsey thinks that really where corporate sustainability is going in the next 10 years, and it's going to be a multi-billion-dollar market that we hope to be pioneers on. And it's really going to change practices within corporates. So it's a long-term trend, I would say. So if you see any startup that has keywords like natural capital, payment for ecosystem services, these are more like forward-thinking type of startup rather than other startup that tell you about carbon footprinting, offsetting, and all of that. That is a bit more like legacy type of approach. I think the trend is really going that direction. Yeah.
Quick addition to that one. So I want to paraphrase a little bit from Matt yesterday. I think we're grossly underinvested in biodiversity startups and initiatives, and I completely I'm bought into that. So I think it's worthwhile being careful not to just invest everything looking for climate tech. There's probably, and especially in Indonesia, especially in Bali, look for startups that are underinvested, maybe in that area. And I think that there's actually there's an organization that I hired not long ago, and I kind of want to go back to them to talk about scaling. When I first moved to Bali, I started getting my place where I live fogged. And then I started to see that, okay, great, it was killing mosquitoes, but I noticed it was killing other things too. And as I researched, so this is a neurotoxin. So it's actually killing the mosquitoes and the frogs and the lizards and me and my staff. So that's really bad. And I heard about this lady called the Mosquito Lady. Who this is a fantastic initiative. They'll send around a team, and they will figure out where the mosquito is coming from, not just with you, but with all of your neighbors, and they will kill the source of the mosquito breeding, find out where it's coming from, and they will talk to the people who are looking after the gardens and change the way and change the plants that you have. And I planted a ton of lemongrass and changed a lot of things. My neighbors, and I did it. I paid for it, and then gave it to my neighbors for free. But I was thinking that's not very scalable because I can afford that. But probably an ordinary person couldn't afford that. So I'd actually want to circle back and say, how do we scale that? How do we turn that into sort of an educational thing so that you don't have fogging? And then yesterday, one of my new neighbors was fogging, and I was like, okay, I need to go speak to them. So I think that biodiversity, I think I'm going to look at to see what I can do there, and definitely, I don't know if there's a silver bullet yet. But I think it's up to all of us to keep looking and to get advice, and one of the reasons for this network. So,
thanks.
Hello, question to Matthias. As I understand, one of the things you're doing is you're reducing impact complexity for your clients into fewer metrics, of course. If you look at the entire space, not just handprint, do you see the complexity that you can hold or that your clients are willing to accept as a differentiator? Is there a competition to make it as simple as possible and turn everything into a dollar value?
Thank you. So I would say that the last 20 years, right, of corporate sustainability have been really focused on a single metric of carbon. So it was a very simple world, actually. It was not complex at all, right? With this idea that companies have a virtual P&L of carbon, just like they have a P&L of dollar, and that they can really compensate their negative impact by doing some good outside their value chain. That was the dominant framework, that was the dominant paradigm. Now there is a scientific consensus around those questions that make a lot of those corporates that have made those claims, like carbon neutrality. So now net zero is a bit more science-based, but it's still like there are still companies like Microsoft, for example, are going out of those claims after saying for 10 years, oh, we are going there, well, we want to be carbon neutral. And I think the new world that we are co-building with other companies in the corporate sustainability space still has a lot of complexity that is a barrier for adoption to companies that already understood the world of carbon. It's super easy to understand net zero. Oh, you make this pollution, you compensate, you're square, right? The world of natural capital and ecosystem services brings a lot of complexity on the table. And it's something that us and so my two co-founders are PhDs and professors, so it's something that we try to infuse in our communication to simplify the message, to simplify the reporting and the units of measurement, right? But like you ask most sustainability professionals about like payment for ecosystem services, and it's still very new, and unfortunately it's still quite complex for a lot of companies. So I would say it's actually the opposite. It's the carbon world is very easy to understand, and the nature world, because of very high interrelation between all ecosystem and the impact that you have doing one thing, you build a farm here, or the complexity of the impact that you are creating, both positive and negative, is super hard to dumble down to simplify into one measurement metric. We try with ecosystem services and natural capital, but it's a long way to go, to be honest. Does that answer your question? Half. Okay.
I guess my question really has more to do with, you talked about looking for companies, social impact companies, that are profitable. Are we talking about getting the same returns as investing in a non-impact company, or what kind of returns are you looking for, and how would you differentiate, or would your expectation be from a social company versus not a social company? Because I'm assuming we're talking about equity when we talk about impact investing.
Yeah, that's a great question. Of course, investors want to see, like returns maximized. So, yeah, like in our view, like for instance for BIC or our fund, like what we aiming for, like when we decide to invest in a company, it's when we are confident that this investment will provide us at least 3 times our investment within like 3 to 4 years. So that's kind of like the return that we are looking for. So, but yes, I mean, I think it's a great question. Yeah, and I guess it's also, challenge as well. And yes, like at the same time, like, it really depends from the mindset, right? So yeah, good question again. Yeah.
Yeah, I think more to unpack there. Anybody else?
Very quick. I know we don't want to keep people too long. I think 2 things. Not all startups are profitable initially, and it can be a slightly longer-term goal, but eventually they will want to become profitable. I think that you also have to think about returns in many ways, as I mentioned. Returns can be financial, and it's nice to get some return or to break even. And then you have to think about the risk-reward balance that you're prepared to do with your money. You might be prepared to invest in what might become a huge idea, but could fail, so you just need to be prepared to lose that money. Or you could also invest in companies who have a good climate story, who are fast growers. I mean, you see people like Apple trying to transform themselves, and they're doing a lot of. They've got some more work to do, but they're definitely making an effort. So of course, you can have these bigger investments where you can get money back, but again, maybe divest from companies who are not doing things like that. But then there's another kind of a reward as well and a return, and that's air you can breathe. And kids, they're not going to get respiratory diseases, and you have to think about the bigger impact that is non-financial. So just like non-financial reporting, there's non-financial returns, and I know that we all feel that, but I think the valuation of that is becoming clearer.
And just to add to that, I think it really depends on the stage that you're investing in. So, if you invest in the early stage, you would like to get, at least 3 times in, a couple of years' time. But if it's a more like mid-growth stage, then, just, 10% IRR or 8% IRR, that would be completely fine. Great.
Thank you. Big round of applause to Mathias, Bruce, and Nicolo today. This is a huge topic, so we're going to obviously give you guys some time to network and connect. And please give us some feedback. We'll be sending out a form later just to let us know what you guys want to hear. This is really about bringing the ecosystem together and creating the stuff as a community. And a big call out, I would like to see some more female founders here. I'd like to see more Indonesian startups up here on this stage. So if you know folks that are working in this space, please connect to some of these guys, connect to us, and we want to see more voices and more diverse voices up here as well. So thank you guys, and again, thank you to the speakers for an amazing session.